Hello traders, Gary Wagner here. Just about 10:45 in Honolulu, 5:45 in New York. It is Thursday, October 11th, 2018, and this is the Daily Report for Gold and Silver. Massive upside surge in precious metals, specifically gold, gaining almost 3% on the day, a net increase of over $35, and December gold futures are currently fixed at $1228.90. If you recall from yesterday's show, we did send out a special trade alert and we went long at 1196.40. This morning I sent out another trade alert to raise our stops. Our stops initially had been just below 1180, and at this point we have moved them up to 1221 and change. We will talk about our current trade in detail as we look at our technical studies. Silver also having a very respectable gain of over 2%, almost 30 cents, with silver closing at $14.62 per ounce. Platinum, a 2% rise, $17 at $8.45. And the lagger of all the precious metals group, oddly enough, has been palladium, up $5.40 at $10.72. Dollar weakness today did provide some tailwinds for the precious metals rise. However, it only accounts for about 20% of the enormous move in gold today. US dollar index down about 0.5%, currently at 94.68, and most importantly is the fact that it broke below the shorter term 50-day moving average, much in the same way that gold traded above it today. Now, all of this in response to a second day of massive liquidations in U.S. equities markets. The Dow Jones Industrial Average has lost over 1,300 points, over 5% over the last 2 days of trading. Today is significant because of two things. Yesterday, we saw the closing price actually break below the 50-day moving average, and today's move actually took the Dow Jones Industrials close below the long-standing 200-day moving average. Now, all of the other indexes sold off in suit. The NASDAQ Composite lost about 1.25% or 92 points. It is also well below the 200-day moving average, although it broke below that yesterday. And lastly, the Standard & Poor's lost about 2% at 2728, also closing below the longer-term 200-day moving average, which beckons the following question. Are we now about to enter a bear market in U.S. equities, or is this going to be like other retracements, a fairly short but very, very strong sell-off? Traders, the setup really began yesterday. When we look at our weekly chart, we can see that even on the week, we've got a most respectable gain in gold pricing, currently at $1227.70, up about $34 on the day. What is most impressive when we look at this chart is the fact that we had a close well above the resistance area created at $1,218. That is the 0.618% retracement. It is a very long retracement set, beginning at these lows at 1124 up to the highs of 1370. So the fact of the matter is, we had this market basically retrace about 78%, a little bit over that, before staging a pretty impressive recovery. However, the real tell of the tape is when we look at our daily chart, and I've just pulled that up. On this daily chart, we have our two key moving averages, the 50-day moving average as well as the 200-day moving average. 200-day up here in red, obviously at 1281. It hasn't been challenged yet, but 1204.20 is the 50-day moving average, and the fact of the matter is we broke well above the key psychological level of 1200. We flew past that, and we flew past the 50-day moving average, and you can see that we had a very impressive run today in the market. Now, Fortunately, we did recommend initiating a long position yesterday. It's always been my belief that it's a matter of positioning because we don't know when a market's going to have this kind of a major jump, but as long as you're positioned prior to that, you can take advantage of that. And we were fortunate or lucky enough to do just that. The real way to look at this market is on a very, very short-term basis. And to that end, I'm going to pull up a 60-minute chart. Traders, as you know, yesterday we did send out a special trade alert. Traders taking that call got in right in this area, which is 1196.40. It was just before the market jumped, and I believe that the market closed for the day at approximately 1198.50, somewhere in that area. Now, initially, we put our stops below 1180 so that we could protect ourselves against any downside. However, when the market really popped up and popped strongly to the upside today, I did send out a trade alert recommending that we move our stops up so we could lock in some profit. Currently, our stop is at 1221.13, and really what I was attempting to do, and what I am attempting to do, I should say, is to guard against any kind of severe profit taking that could come into the market at any time. What I did is this is the point in which I actually trailed the stop up, the second candle here. I saw that we had some weakness coming into the market. My belief is that it would recover. However, I wanted to place a stop underneath this candle. Now realize these are very, very short-term market moves, an hour per candle, but by placing it below this particular candle at 1221, I believe that what we'll do is protect ourselves against any kind of massive profit taking in the market. And if a round of profit taking ensues, we will be part and parcel and benefit from that. Based on today's move, my current exit strategy is as follows. Obviously, if we see the market back off, we will pull profits as our stop is hit, currently at 1221 and change. I don't really show any real resistance in the market up until about 1240, and that's based on these bottoms here, as well as this top here that comes in at around 39, as well as the 50% retracement that comes in at 1246. So that would be my current target for our current trade. Therefore, traders, maintain our current long position, which is at 1196.40. Maintain our current stop at 1221 and change. This has been Gary Wagner, wishing you, as always, good trading, and I am so happy that we were able to deliver that to you today. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.